EIC ज्वाइन किया अभी पूरा बंद करके EIC ज्वाइन अब EIC की हो रही है नहीं नहीं ये भी चल रहा तो EIC भी स्टार्ट हो गई
We have achieved 1.6 billion Saudi riyals compared to 1.5 for the same period in 2024. And as you can see, the revenue growth, historically, EIC revenues has increased at almost 32.3% AGR during the last 5 years, from 2020 to 2024. This is mainly due to the increase in the productivity to meet the growth demand in the Kingdom of Saudi Arabia. And as you can see, the 9 months, this is the increase of the revenue. Same thing for the net profit. As you can see, the net profit over the years, in 9 months, 421 million compared to 297 million, and the percentage from the sales. the percentage from the previous years. So 26.36%, it is the increase from the 297 to 421. And the 19.36, this is the increase from the previous 9 months year. This is the free cash flow, as we have mentioned, compared to the compare year by year up to 2024, and this is for the 9 months. It's 421 compared to 304, and it's already, as you all know, that we have announced that in Belgium we have bought the land and the buildings, which our factory, the existing factory, is operating from, and the whole deal was almost 80 million Saudi riyals. The title deeds already converted into the it was already, we own it. It's converted into the Bowels assets, and it will be reflected soon on the balance sheets of EIC. And also the SPTC, as all you know, that we have an expansion in SPTC. This is to cover the part of the power transformers and the extra high voltage, the high voltage and the extra high voltage. Also with a new with the new products which we are not manufacturing at all in our company, which is the capacitor banks, the reactors. Sorry, the reactors. And we have, invested almost 2 million Saudi riyals, and hopefully by mid of 2026, the first part of the factory will be operating for the high voltage, and for the extra high voltage will be by mid of 2027. This is the backlog, as I mentioned. The backlog as of end of September, it's 3.3 billion Saudi riyals compared to last year, same period, it was 3 billion and 40 million Saudi riyals only. So almost there is a 300 million Saudi riyals in difference. And as all you know, that we have signed a contract which was already announced in the extra high voltage and high voltage and the reactors, value of 1.4 billion Saudi riyals with SEC. And also we have signed with SEC in the distribution sectors. We have signed a contract with approximately 785 million Saudi riyals, but those two, it is not yet part of our backlog. This is out of the backlog. The earning per share, it's 0.38. It jumped up by 41% from the same period last year, 9 months, I mean. So it was 0.27 halala or 0.27 riyals per share, 27 halala per share, and it's 38 halala per share. So that covers the EIC presentation. Then you are most welcome to ask any questions.
Thank you so much, Mr. Tariq, for the presentation. We are now opening the line for questions. If you have a question, you can either use the raise hand function to ask it verbally, or you can use the Q&A box if you would prefer to send a written question in. Our first question comes from Khalid Al-Udan. Khalid, I've requested for you to be unmuted. You should be able to unmute yourself.
Am I audible?
Yes, you're audible, Khalid. Please go ahead.
Assalamu alaikum. Thank you, Mr. Madhat, and thank you, Razam, for your presentation, and congratulations on the great result. I have one just quick question with regards to the gross margin. We hit an all-time high in terms of gross margin. how sustainable is the current margin profile? And if you can provide us with the mix for the top line for this quarter, if possible.
Okay, thank you, Khalid, for your good question. As we have announced, let me just make it very clear. The company has 22 products with different mix. We have transformers, we have switches, services, automation, and also and transformers, of course. The transformers, this is the big part of our revenue. The highest part of our revenue is the transformers. And the transformers, it is divided into four categories. One is the distribution transformers. Second one is the special transformers. And the third one is the small power transformers. And the fourth one is the power transformers. Substation. And also the substation. But we don't want to talk about the substation. It is with very low gross margin. Distribution transformers also with very low gross margins. So we have three where we have high gross margin always in the company. I'm talking now from the transformers business units. So we have the special transformers, which is mainly we are manufacturing to the oil and gas demand. And we have the small power transformers, which also we are manufacturing for the oil and gas contractors. And the power transformers, which we, in SPTC, Saudi Power Transformers Company, which we are manufacturing for both oil and gas contractors and also to the national grid contractors. The competition in those for the three elements, they are very low. So there is no huge competition. This is why we are using our ability to mix all our products in order to give a complete bid to our contractors. This what giving EIC the strength in order to play with our gross margins compared to our competitors. Normally, when you bid with any of the contractors, they want distribution transformers, small power transformers, services, automation. You know, they want a complete mix whenever there is, you know, a project and the switch gears as well. Whenever there is a mega project, okay, will it be oil and gas or out of the oil and gas businesses? So those contractors, the international contractors, they want to come to a company which gives a total solution products. Then they come to the EIC. So when they come to the EIC, we basically give them very low gross margin in some of the products and very high gross margin in other products. So our backlog, or let me talk because you're saying that, okay, the results what you have seen, the growing up and the gross margin is because of that. Now, the backlog what we have, there is a good part of it, it is with the higher gross margins of products. We have also in the services and also in the automation. In the 9 months, we have seen a big increase in the automation needs. Okay, and the automation normally the gross margin is high, and the services as well. The gross margin is high. So it depends on the mix. So if I sell, for example, in the 9 months more in the distribution transformers compared to the higher gross margin products, you're gonna see that we are declining in the gross margin. But if I'm selling of my mix, I'm selling with the high gross margin products, then you're gonna see a sustainable growth. And this is what the company always, you know, trying to do. Whenever there is, you can see that there is no much growth. There is no big difference in revenue, although there is a big increase on the gross margin. And this is because we were very selective when we built our backlog. Same thing, the remaining, the 3.3 billion Saudi riyals, the gross margin. We have built it in a way that the gross margin is higher than what's been in the past. So the company is very selective in picking up within some of the products. I'm not talking about the whole products, because you have to keep your factories, you know, full in a certain products in order to reduce your overhead and you reduce the your rate per hour for our labors.
Clear. Just following on this point, we've been very selective in terms of the backlog, which has, I presume, a higher contribution from the transmission segment and the higher voltage segment. And, SEC and Aramco have been spending quite a bit over the last couple of years. How sustainable is this demand going forward? Can we see it plateau, or are we seeing sort of huge growth in that segment?
Okay. First of all, the 1.7 billion what we have announced, it is in the high voltage and extra high voltage contracts. The contract that we got, it's in the high voltage and extra high voltage, and it is not yet part of the backlog because you know that this is whenever you get a PO, okay, that contract that we have, the frame contract that we have signed, we must get a PO from the national grid in order to convert that into our backlog. Up to now, with the high gross margin or SPTC, which you are, if you want to talk about only that part, because as I said that the high gross margin, it is not only from the high voltage and the extra high voltage. No, it's in the services, it's in the small power transformers within Wisconsin. It is the special transformers within Wisconsin. There is an automation part. It is all within Wisconsin. So it is not, has nothing to do with the extra high voltage or the high voltage and the extra high voltage. But yes, you are right. The most profitable product is the high voltage transformers. And the backlog what we have, 2026, we are fully booked in the high voltage. 27, just a minute. 27, we are building up now our backlog in 27. Going forward, we see that there is a big demand. The export, there is a big potential for the exports. What we have seen internationally, most of the international factories, they are fully booked for the coming 8 years. If you look into Siemens, if you look into GE, most of those, they are fully booked in Europe and in the United States. There is a huge demand coming for the power transformers and the extra high voltage transformers.
That's why we are keen to put the market overview part of our presentation.
So answering your question, it's a promising. We have to take it year by year. What we can give you right now, the solid is for next year. Next year, 2026, we are fully booked in the high voltage. In 2027, still we are not fully booked, but we have a good backlog for 2027 as well.
Okay, and just following on to that point, is the growth in the net margin, can we expect both to 30% in net profit for 26 and 24?
I cannot tell you, but the only thing is in the power transformers, the gross margin of 2026, it is better than 2025.
Okay. And better than the second half of 2025? Or is it better than just the average for the year?
Yeah, I'm saying 2026 for the power transformers. Okay? The gross margin is better than what we have in 2025. And what we have achieved in 2025. Let's make it this way.
Okay. And the capacity that's being fully for 2026, is that including the new extra capacity for the high voltage?
Yeah. It's with the new capacity of the high voltage, we are fully booked in 2026.
Perfect. Clear. Thank you.
Thank you, Khalid. Our next question comes from the line of Waruna. Waruna, you should be able to unmute yourself. Please go ahead.
Hello. Hi. Good afternoon. Am I audible?
Yes, you're audible, Waruna. Go ahead.
Hi. Thank you very much, gentlemen. I have just two. This is Varuna Kumargam from SICO, Bahrain. I have two questions. One is related to the backlog, which is 3.3 billion. I just want to understand over what period will this backlog be recognized? Is it over 2 years or even or less? And second question, regarding the European business, you mentioned that you're going to set up a new factory there as well. I want to understand the margins in Europe. What you get in Europe, how does that compare with the margins you generate in the local market?
The first question is the 3.3 billion Saudi riyals backlog. It depends from, of course, product to product, but the backlog, it covers all the way up to the first or second quarter of 2027. So this is part of it. The second part is the backlog, is the gross margin for bowls. It's located, as you know, in Mechelen, in Brussels, and it's manufactured transformers, special transformers, and distribution transformers into the utilities, and also special transformers into which is being used by the renewable energies and the energy battery storage systems, and so on. And the gross margin of that is very good gross margin. Yeah. Huh?
Data centers of
Data center, and so the gross margin is good gross margin.
Okay. And if I may follow up, just one more question related to the.
I'll just to let you know one thing. We are able to make transformers here in Saudi and export it into Europe. You know that we have announced that we won 83 million Saudi riyals world contract with the floffies.
303.
Yeah, it's 83.
303 million.
303 million.
303 million riyal.
Riyal. Okay. It's 80 million euro.
Maybe.
Yeah, 83 million euro contract with the floffies. The manufacturing the transformer in Saudi at that time, we were able to compete with the other European transformers, okay, with the prices. So the prices in Europe, it is better what you see here in Saudi in distribution transformer. Why bowls they could not do that? Because we had a certain mix in order to make optimization for the whole EIC gross margin. So sometimes bowls, they are busy in very special transformers. They want to keep them dedicated for the high gross margin, and the low gross margin, we feel that we want to take it from the STC here in Saudi. So we do that exchange, between within the companies in EIC. So the message is the gross margin in Europe is sometimes, in certain products it is better than what we see here in the GCC countries.
Okay, that's clear. Just one more follow up on the framework agreement that you mentioned, like I think 1.7 billion for high voltage and extra high voltage transformers. So this one, when do you expect POs to be signed and the confirmed order to be received? Will it be this year?
Let me just tell you how this works. SEC normally when they make call it the frame agreements. So it is a commitment from the supplier side, which is our side, that we will supply this much material with this much transformers with guaranteed value. So SEC, they will guarantee to us that they will be getting 80% or 90% of this total contract, and it might go to 140%. It might go beyond the level what we. As maybe you have seen our announcement. What's the? In details. So once you sign that, it is a commitment from both sides. However, we are not reflecting it into the backlog without a BO. So SEC, whenever there is a demand, they issue a BO based on the frame contract that we have signed with them. So that BO, it will be translated into our backlog. So for example, let us say 1.4 billion with let us say 120 transformers. then SEC, they will issue a PO for 20 transformers only. So that 20 transformers, it is the value of it, it is already known, okay, part of the contract. Then when I get that PO, I will reflect that PO into the backlog. Up to today, we have no orders from SPTC, from SEC, but we are expecting them, to have by December to receive the first PO.
Okay, right. And in terms of your capacity utilization, do you think, I mean, with this increase in demand, because your capacity expansion is going to be online, I think in early 27. So
Yeah.
until then, how are you managing
The first orders we're gonna get from the SEC, the first order from what we're gonna get from SEC for the high voltage, it will be in mid of 2026.
Okay, okay. So then in time for the new factory.
So delivery, huh? Delivery.
Okay. No, what I'm saying is,
So what we did, we have anticipated in 2026 a certain transformers to be done per day agreements without receiving the PO, and we make a slot for SEC part of that frame contract. So this is why we kept that reserved for the frame contracts.
okay. Okay, clear. But my last question is in terms of capacity, because right now you have a certain capacity for transformers, the manufacturing of transformers. But this capacity, what is the utilization of this capacity, and are you able to meet the demand, the increase in demand with the existing manufacturing capacity, and when is the when do you expect this capacity to increase to meet the increase in demand?
You're talking about the high voltage?
Yes.
Okay, the high voltage, we are, as I said, 2026, per number of transformers and per prices, it is higher than what is in 2025. Okay? Because of the capacity. With the capacity, we are fully booked for 2026. We are fully booked.
Okay.
2027, I cannot tell you but we have a backlog for 2027. But still, we are filling them up. As we speak, we have 700 million Saudi riyals, 700 million Saudi riyals finalized bid for 2027, but not yet signed. It is not part of our backlog. Still, there is a negotiation with the contractors. 700 million Saudi riyals. It's under negotiation for 2027 for the high voltage transformer.
Okay. Yeah, that's it from my side. Thank you very much.
Okay. And keep in mind, we are also expanding and we are fully booked, by the way, on the power transformers, and we are expanding. We have already invested 30 million Saudi riyals in order to expand the small power transformer, which is manufactured by another company called Uscosa. Okay. And the expansion will finish within 6 months from today.
Okay, right. Thank you. Wish you all the best. Thank you.
Thank you. Our next question comes from the line of Nafis Al-Abbas from Ajish Capital. You should be able to unmute yourself, Nafis. Please go ahead.
Well, congrats, gentlemen, on the excellent results. Thank you again for the presentation. We really appreciate your time. I have two questions, if you allow me. Number one is on the supply side. Do you see other peers in the kingdom adding significant capacity to compete with you? And second, is there a possibility to get an indication or a rough estimate of the margins of these global players, just to understand the differential, if there is further ceiling for you guys to increase your gross margin or your net margin, just an indication for them. Thank you.
Welcome. Yes, of course, the Saudi market is attracting the other players, to come here to Saudi. There is an initiative the Ministry of Energy and also from SEC to increase the manufacture of the high voltage and extra high voltage transformers into in Saudi. And there is two manufacturers they have already announced to come to Saudi, and they have already announced this, but they did not start yet. One of them is a Sharif group with the Volt Amp. The second one is a Suwedi with OpenAI. But both of them, nobody started yet to allocate a lot in order to start their factory. So we are talking about, we don't think that those people, they will be here by 3 years or 4 years completely. The frame contract which was already signed with us. We know that there is two other transformers manufactured. They will be coming international. One of them is CBS, and the other one is Siemens. And those also they're gonna come, but it will take time for them to come here. The market, we believe the market is good for other competitors to come. We have a good competitive edge, being that we know we were here, since 2010. Our existing factory is almost depreciated. I'm not talking about the new factory. I'm talking about the existing factory. So we believe we were here, and with the old setup here, we believe that we have a competitive, edge compared to anybody who will come in the future to open a factory. It took us long in order to be qualified and to generate the first transformers from our factory. It will take them the same. So the competition will come definitely. And the gross margin internationally, it will be the same gross margin what we are doing right now. We have checked the market in Europe. We have checked the market in the United States. It's almost the same in the high voltage and extra high voltage. We brought the prices that our competitors they are selling at their end or at their end here to Saudi. It's almost the same prices. So we are not afraid from the competition as long as the demand will cover everybody. Right now, by the way, with the capacity what I'm having, there is a big part that it goes to our competitors while they are not here in Saudi as well. Because of the capacity. I don't want to expand. By the way, the expansion we have approved from the board is almost 50% of the demand in Saudi. We did not expand to 100%. Because of the expand to 100%, it will be, costly, and it's not leading the market, in the right way. So we believe that it's the competition will come. Definitely, it will take time, but we are ready for it.
Well, thank you very much for that. That's very clear. My last question maybe is on the extra high voltage capacity. I mean, roughly speaking, would that obviously generate a higher margin once it's fully operational?
Just to let you know, the extra high voltage, it is a new item. It is not produced by the company as we speak. So the extra high voltage, what does it mean? Which we don't manufacture up to today, and the capacity is 2 transformers per month.
Yeah.
So 2 transformers.
But like, how compatible would that be? Like, would it be like 10% higher, 5% higher? Just a rough estimate.
The gross margin of the extra high voltage is way higher than the high voltage. I cannot tell you exactly, but it is way higher.
All right, perfect. Thank you very much.
Thank you. Our next question comes from the line of Pratik Kandalwal. Please go ahead, Pratik.
Hello.
Hey, Pratik, we can hear you. Go ahead.
Yeah, hi. This is Pratik from Emirates NBD. Thanks a lot and congrats on the great set of numbers. I just wanted to understand. So you have given us the market data. So can you just throw some light or throw some numbers like what is the overall market in Saudi for, let's say, high voltage and extra high voltage in terms of, reals, like what is the total addressable market we are talking about? And second, you mentioned that in 2026 the margins for power transformers will be better. So is it coming from the mix or from the higher operating leverage? So just trying to understand, will at least for the first half 26, will 25 act as a high base and we'll see like a flattish revenue and bottom line growth, or you still expect some growth over there because of the way the backlog is currently? So yeah, these are the two questions. Thank you.
Okay. Let me just start with your second question. I said the gross margin in 2026 for the extra high voltage, for the high voltage, it is better than the 2025. Why is that? It has nothing to do with the mix. Talking about the extra high voltage, because there is a mandate for the localization. To the contractors, it is for their benefits to sign with the local manufacturer, and the only local manufacturer is EIC, which is SPTC. Is that clear? So, being the only manufacturer in Saudi, I have to be very selective in my capacity. So I want to fill my capacity with the contractor who's agreeing with me to select me as the first priority for them to supply those transformers. So when the contractors, he discussed this with SPTC and he puts our name as the main supplier of the high voltage transformers, then he will get the privilege or higher score because of the localization in front of the national grid and Saudi Aramco. Is that clear?
Yeah, it's very clear. Thank you.
So this is why I'm selecting only the one which they are approving my higher gross margin. So this is number one. Number two, or back to the first question, which is what is the market of the extra high voltage the high voltage, let us say. Maybe Midhat, if you have any.
No, we just announced that we, with SPTC, Mr. Tariq said during our expansion and during setting up the capacity, we are not targeting the full market. As of today, as mentioned, we are selective, and a good part of the demand is going outside. So going forward, the capacity built here, it is maximum, it is between 50 to 60% of the total demand. That is excluding, that's what we talk about market in Saudi Arabia, that's excluding export. So that is.
Let me make it. I'll give you a figure. I think it's almost 2 billion Saudi riyals.
Okay, thank you.
Did I miss any questions from your side, or did I answer?
No, you were able to answer. Just one thing, if I just wanted to confirm this. So the 1.4 billion contract with SEC is not there in the backlog which you mentioned, right? 3 point.
None. Zero. Up to now, zero.
Right.
As well
Okay. Thank you.
also the other
There is some. The solution, there is some. Yeah, the solution we received POs. I believe it's almost 100 million, something like this. But in the power, no, not yet.
Okay, all right. Thank you.
Thank you. Our next question comes from the line of Dan Mikhailov. Dan, you should be able to unmute yourself. Please go ahead.
Hello, Tarek. Hello, Medhat. Congratulations on yet another set of brilliant results. I just have two questions from my side. The first of them is on uh, uh, your ability to ramp up or your plan to ramp up utilization in distribution transformers. You mentioned that you've secured a contract to export transformers from Saudi to the EU. Is there anything else in mind that can improve utilization there? Which I think last time we spoke, you said it's about 70%. And my second question is about reactors. You mentioned that it's a new product, so I'll be curious to learn a bit more about the margins on it, so the production process, how comparable it is to manufacturing transformers, and whether or not the growth in that product should going forward track substations, because from what I understand, it's primarily a product that goes into substations. Thank you.
Okay, the distribution transformers, yes, we have, we are using a strategy of filling the capacity of the factory. By doing that, you will have two things. One, as I said, one is by reducing your overhead costs. Second is by reducing, you're gonna reduce your labor, not labor cost, the
Labor rate, yeah.
labor rate, okay, the labor rate. So those two items play a major role on the financials for the any distribution factory. So this is why when we compete with others, we are making our formula that I will do this much of possible with the higher growth rates in Europe by exporting. Locally, I have to be on local because Europe, it cannot give me the full capacity in my distribution. So what I do, I have to take some with a low gross margin from the SEC distribution, because we have almost 10 distribution transformers suppliers in Saudi. It's strong, very strong competition. So that mix will make my capacity full.
Exporting also.
Okay. Of course, the Dubai, of course, there is other markets which my competitors are doing the same thing. But we are exporting to Iraq. We are exporting now. We are finalizing a deal with Syria, with different contractors, and those with very good gross margin. So we are always trying to make the capacity utilization, at the maximum in order to reduce the cost in the distribution. Talk about distribution. In the power transformer, being the only one, no, we are very selective. So if the gross margin is not what is in our mind, then we don't take it, because we know the market, we know what the tenders is being, the pipeline which gonna be floated shortly, and so I don't want to fill my factory with a gross margin like what I have in 2025. So this is the game. This is the first question. Second question is the reactors. Reactors, it is part of the high voltage and extra high voltage project, because the reactors, it comes 132 kV and 380 kV. Yes, it is part of the substation with the gross margin similar to the gross margin of the transformers. How comfortable we are in doing it? Yes, we are very comfortable. We have the technology, Bowles technology. So we own the IP. We are manufacturing this product in Europe from Bowles. So we are comfortable about the prices, the technical know-how, the design. By the way, we have submitted the design almost a year ago to SEC, and it was approved by the National Grid. So the design is already approved by National Grid. So we are comfortable with the technical know-how. There is no issue about it. Is there anything missing from your questions?
Maybe just a quick follow-up. Would you expect yourself to maybe go after any sort of other adjacent products which are integrated into substations or transformers going forward, or is the addition of reactors to your portfolio
let me
a one-off, and you will be focusing only on sort of the new products within your core sort of segments?
Okay. We have it presented to the board a month ago about going forward the growth, EIC going forward the growth, and it covers up to 2034. We have identified 30 products, new products. Those products being identified based on two things: based on the demand and the supply locally zero, or the demand more than the supply. So those two conditions.
Targeted localization.
Yeah. So I'm talking about, we are targeting a localization because, as you know, that there is a mandate by all the, you know, the 2030 vision. It has a mandate for localization. So having this strategy, we have identified 30 products, and we have working now on the, you know, with the international companies in order to have the joint ventures here in the Saudis, or you know, acquisition, M&A, all the technical license. So to answer your questions, we have 30 products in our pipeline. We're gonna announce them very soon. Whenever there is a deal, you know, gonna happen soon.
Yeah, this 30 products also is actually coordinated closely with the main sectors here, like the utility, Aramco, BIF. So these are the products which is targeted to be localized. So while selecting these products, it's coordinated very closely with these main partners.
Thank you very much.
Okay, any further questions?
Yes, we have a couple of more. Next question is from Saud bin Batal. Saud, you're unmuted. Please go ahead.
Assalamu alaikum. Thank you, management, for the presentation. معكم سعود بكال. I have a couple of questions. I just want to start for the backlog. I want to ask if you can give us some color about the average gross margins for the current backlog. And also I want to understand if you may give us more color regarding how much of the current backlog is expected to be recognized in 2026.
Okay, first of all, your first question was what? The gross margin? What's
the mix of backlog?
Okay. The mix of backlog, as we have said, it comes from various. It has a distribution, it has a services, it has automation. How much is the gross margin exactly? Of course, we cannot say it. And how much is the backlog part of 2026? Of course, we cannot say it. But normally, as I said, the gross margin, the backlog, it's good for the remaining of the Q4 of 2025, 2026, and plus part of 2027. I will assure you that our budget of 2025, 2026, it has a good growth in the top line. Of course, we did not run, still the budget has been going, we did not run the bottom line, but we have a good growth in the top line for 2026.
Thank you. And regarding based on the current pipeline, is there any expectations of the expected increase in the backlog for the next years or the medium term?
As I said, we have almost 700 million Saudi riyals deals not yet finalized. You know, it depends. Some of the projects get delayed. Some of the, you know, there is a lot of things now. It's happening, but 700 million Saudi riyals. It's we are identified to be the let us say the L1, and it's almost close, but it is not formulated into a BO yet. So since it is not formulated to a BO, we cannot, of course, disclose. But there is a big potential. The pipelines, as I mentioned in the project, it's a promising.
Plus the orders announced, the contracts announced, most of it are not yet in the backlog.
Okay, and sorry, one last question from my end. I just want to understand how much does steel, aluminum, and copper represent from your raw material costs? It's possible to have more color on it.
Yeah, for steel, of course, aluminum, we use in transformer, in power transformer, we use copper. In distribution transformer, we use aluminum for the core. And we use different type of steel. We use silicon steel for the core. We use cold roll steel for the cooling, and we use hot roll steel. So in general, the aluminum represent about 10 to 15% of the cost, and the copper represent about 20% or less, depending on the copper price. Steel as well represent about 20% of the cost.
Out of total COGS or raw material cost?
About part of the total cost.
Okay. Thank you, management.
Thank you. Next question comes from the line of Divya. You should be able to unmute yourself. Please go ahead. Okay, we can come back to Divya. I'll move on to Abdulaziz. Oh, sorry. Go ahead.
Okay. So I just wanted to understand on what is the current capacity and utilization rate. If you could just throw some color on that, and also how do you see the current capacity and utilization as compared to the past? And are we also thinking of some expansion planned? If yes, what is the expectation for capex and timeline?
The capacities, it goes from factory to factory, product by product. Distribution, we have two factories. We have actually three factories. One STC, the other one within Wisconsin, and the third one within the Bowls. So since we are serving different sectors, the distribution transformers here in Saudi, in STC and in Wisconsin, it's almost 85% in capacity as we speak. So there is a margin of growth almost 15% remaining capacity. If you go to the power transformers, small power transformers, talking about the one within Wisconsin and the one within Bowls. In Bowls, still there is 50% capacity remaining. We are not fully booked for 2026. However, for here in Wisconsin, Saudi, we are almost, I would say, 75% full. If we talk about the high voltage, it is 100% full for the remaining of the year, for 2026 and part of 2027. The extra high voltage, it is a new product that it will only be materialized in mid of 2027. If you look into the switch gears, because as I said, we have to take it product by product. If you take the switch gears, we are almost 70% full for 2026. Still, we have a room to add in 2026. And also in 2027, we are not fully booked yet. We still have big room for 2027. If you look into the services, we are almost, I would say, 40%. And the automation, we are almost 50%. So still we have room to build, but not for 2025. 2025, we are fully booked. 2026, still we have rooms to add up, you know, in the for the other. In general, if you look into the whole company, I would say we are
except the power consumer.
Yeah. If you take the power transformers out, we are almost for 2026. We are almost, I would say, 85% to 80% full. Your last question was where we stand on this expansion.
Yes. So are we looking for some expansion and of what capacity are we looking at?
Okay, we are doing the 3 expansions. One on the switch gears, we are doubling up our capacity in terms of the number of structures and in terms of revenue. This is in the switch gears. Switch gears, it's we have switch gears factory, which is serving oil and gas, and it is the maximum capacity. If I take it by revenue, it is almost 300 million Saudi riyals. We have already completed a new expansion which will serve the utility in Saudi, which is the EIC standards, the European standards, and we added up another 300 million Saudi riyal, was not in 2025. It will be in 2026 only. We have expanded our small power and the special transformers factory, and it will finish after 6 months from what we speak now. And it will contribute partially in 2026 and fully in 2027. The third expansion, which we have, everybody knows about it, is in this PTC. This is for the high voltage and extra high voltage. And this will be, you know, mid of the 26 and mid of 2027.
Okay, got it. And also in the existing utilization that you mentioned, 80 to 85% of utilization. If I talk about the overall capacities, so I mean, what is the overall capacity as a whole and not product by product?
Well, we can reach by those expansions. We can go up to 3.5 billion Saudi riyals.
Okay. No, I meant what is the capacity that you have existing MVA? Like, what is the existing capacity that EIC has right now?
I'm sorry, this is what I said. I said you cannot take the whole EIC because you have to take it by factories. You cannot take it by the whole EIC. Okay. So if I say to you today, as we speak, from the whole thing is 85%, you will say, okay, there is a room to add in the power transformers. There is no room to add in this. The power transformers is fully booked. So the whole capacity is misleading because you have to check with which products. This is what, you know, the meaning the meaningful for the capacity in, you know, in terms of the revenue.
Okay, got it. Yeah. Yes. Thank you.
Thank you. Our next question comes on the line of Abdulaziz Al-Sheikh. Abdulaziz, you should be able to unmute yourself and ask your question. Go ahead.
Hello, gentlemen. Thank you for the presentation and congrats on the great set of results. I have 2 questions from my end. The first question is on the oil and gas. I believe you mentioned in the announcement and again in the presentation that demand from the oil and gas is increasing. So is it mainly coming from the gas side or the oil? Is it Jafurah? And where are we in the cycle? Do we expect that demand to sustain throughout 27 or even further? What's the management view on the oil and gas side?
Okay, let me just give you the selling distribution of EIC. We are selling 45% of our revenue. It comes from the oil and gas sector. Oil and gas sector, it means Saudi Aramco direct contracts or any of the international contractors work for Saudi Aramco businesses. And the other 45%, it comes from the utility. What does utility mean? It means direct contract with the SEC, will it be the national grid or the distribution, or any of the contractors work for SEC. And the 10% comes from the export. This is basically our mapping of our revenue. The oil and gas, it's booming in the gas sectors, but not in the oil. It does not mean the oil projects it's coming down. No, all the maintenance, you know that Saudi Aramco, they have to maintain their production capacity. They have announced cut in the capex, which is related to increasing the capacity, increasing the oil pumping capacity. But in order to maintain the existing capacity, you have to spend a lot of capex in order to maintain the well efficiency, performance, and you have to change a lot of electrification and so on, which is the normal cost of operation and maintenance cost. In the gas sector, we basically have supplied most of the equipments on the Jafurah. You know, Jafurah 1, 2, 3, they went into 3 now. Partly, شغالين معاهم في هذا شو اسمه ريس Marjan, all it's a lot of projects.
But Aramco has announced, as we mentioned during the market overview, they have announced about 85 new projects in the next 3 years. So the demand is there in the oil and gas.
So Aramco, they have 85 projects. This is as per their announcements lately for the next 3 years. And this is almost 6.3% increase. If you take it for the past of 5 years, it is 6.3, or the past 3 years, it is 6.3 SAGR%. So
very clear. Thank you so much.
And the backlog, by the way, the backlog, it has a good volume from the oil and gas.
Very clear. الله يعطيكم العافية. Just to follow up here, so you're currently supplying for Jafurah 3, or is that are you supplying across all phases concurrently, or have you finalized 1 and 2 and currently working on the 3rd phase of Jafurah?
Wallahi, to be honest with you, of course, Jafurah number 1 is already supplied, it's already finished. Jafurah number 2 and number 3, I think it's in the pipeline. I'm not sure what we have supplied, what we have not supplied, but to be honest with you, we can you have my email. I can reply to you in detail if you wish on how much we get in Jafurah 3.
Fair. That would be very helpful. Thank you so much.
But it will
my
vary,
second question.
It will vary from product by product. It will vary from product to product. Because Jafurah, you have to supply special transformers, small power transformers, cable tray, power transformers, switch gears, services. So it will vary from product by product.
Clear. الله يعطيكم العافية. My second question is on the reactors. Basically, I'm trying to understand that market that the company is expanding into. Is there a specific kind of reactors that you will be supplying, specific voltage range, and basically, how is the demand for reactors? Is it expected to increase given the high incremental renewable energy coming into the grid? How should we think about the reactors in general? Because we're new to that part of the market.
Hey, reactors, it's 2 types. We said that what is the voltage rate? That is 132 and the 380. High voltage and extra high voltage reactors. it is embedded in the substations. As long as there is demand on the grid, there will be demand for the reactors. It goes with the substation demand as well. The gross margin of it is, as I mentioned, it will be a good gross margin. Nobody is supplying it now from locally. We will be the first one. I'm not sure that if I covered all your questions.
Allah يعطيك العافية. Clear. One last point. When it comes to reactors demand going forward, does the higher renewable energy generation in the mix affects reactors demand? Would it increase going forward because of that, or that is irrelevant here?
Definitely, it will be. As long as you are building a new substations, you need to have a reactors that goes with it. So yes, there will be demand for it for sure. This is why SEC they have put that part of their frame contracts. So the frame contracts is it shows that there will be demand in the future. But by the way, the reactors, it is not the main thing which will change the whole game. We need to talk about the transformers. The transformers, the 380, the extra high voltage, and the high voltage. Those are the which has more on revenue compared to the reactors.
Clear. Thank you so much, gentlemen, and congrats again on the great results.
Thank you.
Thank you so much. We do have a few more questions left, but I think we've gone 10 minutes over time. So
I think Yusuf, Khalas, we have 2 minutes.
Any questions?
We can take the last question, please.
Okay. Well, I was just gonna say on the last one, maybe I could read you one from the chat box since we didn't get there. There was just some questions on capex. What's your capex guidance for the rest of this year and next year as well?
Yeah, the capex recently, of course, we added land as announced. The total capex, excluding the future planned products to add or future investments. But this year and next year, the total capex is about 300 million, which already we announced about 192 out of it. The rest is expansion of what Mr. Tariq mentioned about the small power transformer, the new factory for the expansion of the switch gear, and as we mentioned here, the automation of some of the product lines.
Perfect. Thank you so much for that. That's the end here. Is there any last statement you wanted to make before we end the call, Mr. Tariq?
Well, thank you so much, Yusuf, and for this, organizing this call with all the investors and the banks, and we hope that by year-end we will hear a new good story from EIC. I wish you all the best.
Thank you so much, Mr. Tariq. Thank you so much, Mr. Midhat. Good luck, and that concludes the call. Thank you, everyone. Have a great day.
Thank you. Thank you. Bye-bye.